We want to onboard as many people as possible, and for that purpose, we built this wallet, which is never meant to hold a lot of funds, right? It's meant to, as a gateway for people to come in and try Lightning, and see how cool it is. If you can instantly transfer it, you can basically create this experience, or like this paradigm of like just moving money to an exchange when you execute a trade, and then remove the money once you're done trading. And that basically removes all the counterparty risk that you would take if you wouldn't have these instant settlements. If you think about the wallet and the synthetics, the exchange is where all the sort of magic happens, and these other products are just kind of like satellites that connect to this sort of core engine. It's not the best solution, but it's a good solution to solve this problem that we think we need to solve, which is get people on using this P2P payments network.
Konstantin is the co-founder of Kollider, a Lightning-powered Bitcoin derivatives platform that also offers a browser extension wallet, synthetic fiat stablecoins, and a paid Nostr relay. In our conversation, we explored the value of instant settlement for Bitcoin exchanges. We discussed Lightning adoption to date. We explored how Kollider's wallet and paid subscription-based Nostr relay work. And then we discussed how all of the different pieces of Kollider's business fit together. If you enjoy this episode and if you learn something new, the best way that you can show your support for the show is by sending in sats over the Lightning Network. You can use any Podcasting 2.0 app to do that. There are dozens of them out there, but my favorite one to use is Fountain. Before we get into today's show, just a quick message from our sponsors. Today's show is sponsored by Voltage. Voltage is the premier provider of Bitcoin and Lightning node infrastructure. Today's show is also sponsored by Stackwork. And Stackwork is a Lightning-powered transcription tool that takes the best of AIs and humans to create better, faster, and less expensive transcripts. We'll have more from Voltage and Stackwork later in the show. Konstantin, welcome to the show. We have a lot to discuss about all the work you're doing at Kollider. But before we break down all the different business units and all the things you're up to, let's step back and give folks a better understanding of why you first decided to build Kollider.
Absolutely. Thanks for having me, Kevin. So the backstory of Kollider and myself, I started in crypto in 2017, working for a large market making firm now, which is called B2C2. And I joined them as a software engineer. And I was building their wallet infrastructure or blockchain infrastructure and settlement system. So they moved a lot of money across exchanges, and that basically most of their work went into building this infrastructure rather than actually building a super difficult algorithm. It was more like, how can we move money quicker than anyone else? So I was mostly involved with that, and obviously learn how these people move funds and how they sort of operate. And that was super interesting. But then I left B2C2 and joined a crypto derivative exchange sort of at the end of 2018. And that was sort of a traditional crypto exchange or derivative exchange. And there I was basically building their sort of trading engines, margining engine, risk engines, which was super interesting. However, it was really just another exchange. So there was nothing really that was unique about it, other than they did some cool stuff with super fast infrastructure and so on, really geared towards institutions. But yeah, I mean, it wasn't really anything special. So I left that place in end of 2019, and that's sort of also when I started building Kollider. And basically, the reason we started Kollider was pretty much because of sort of the experience that we sort of gathered in these sort of institutions / traditional companies, is that there's a problem with the way people sort of interact with exchanges. Like if you're a trader, or if you're just if you're a professional trader or institutional trader or a retail trader, the paradigm that these exchanges sort of put on people is that you have to deposit funds and then you can trade, and so they're incentivized to keep you there for as long as they can to extract most value out of you. So, that basically creates incentive for users to just leave their funds on the exchanges. And, that basically creates massive honeypots. People are careless, they don't think about it. These exchanges get hacked, inevitably. And, it's sort of um, it's sort of the unsystematic risk that people take that they shouldn't, they can't, they don't have to take that risk by just basically just using the exchange as a place of execution, and rather than just a place where they hold their funds, right? Exchanges are for trading, not for your, as a wallet. And as such, they actually function great. But the problem is that the whole way these exchanges basically operate. And we sort of discovered that the limiting factor of why this doesn't really work is because the base layers, the base chains, are way too slow. So you move your funds to an exchange, takes some time. Removing it takes some time. It costs fees. If you do it multiple times a day, and it's the same for retail users and sort of more the institutional clients, it just gets really expensive, and you can't really rely on it because there might be network congestions and so on. So basically, from that point of view, it's not really sort of feasible to do that unless you have instant transactions. And so that's sort of how we sort of arrived at the Lightning Network, because it's built on Bitcoin, which is the most basically the asset that's been used most for settlements, or just generally the most stable and by market cap the largest cryptocurrency. If you can instantly transfer it, you can basically create this experience, or this I guess this paradigm of just moving money to an exchange when you execute a trade, and then remove the money once you're done trading. And that basically removes all the counterparty risk that you would take if you wouldn't have these instant settlements. So we decided to build a trading venue that sort of uses this instant settlement, and basically has this idea that people don't have a balance on the exchange, they only have positions. So when people are done trading, the money is basically pushed back into their non-custodial wallet, if you will. And so that's how we sort of it all started, right? Because of that frustration of this, the way these sort of exchanges work. And so we started building Kollider end of 2019, and we just launched, not just, but last October. We were in alpha for a long time because we had to sort of battle test the technology. It's a full-blown exchange, which is quite complex to build. So we had to really, make sure that everything is right. But last October, we launched the exchange. And in the meantime, lots of things happened. But let's dive into these other things later. But that's basically the sort of how we came to building Kollider.
Very cool. I want to get into Lightning, and we'll get into all the different features. But I want to focus in on the point you made about exchanges not necessarily being incentivized to help customers get their funds off the exchange.
Yeah.
Why aren't even putting the instant settlement aside, why aren't there more Bitcoin exchanges that will automatically send funds out to your wallet as soon as you've made a trade, and not let you keep funds on the platform? Because that's something I basically never see. But I have tried out Kollider, and I've played around with that feature where you can kind of sweep funds instantly as soon as a trade is made. But why can't that still exist on chain, even with the 10-minute delays?
I mean, yeah, it's a good question. I think I think there's two there's two parts of this problem. One is obviously a lot of these exchanges, they do serious compliance and checks on these sort of deposits and withdrawals, so that which adds latency and just complexity. But also, I would say that it's not very I think it's on a user point of view, again, they have to pay on-chain fees, they have to wait until this payment clears, and it's not necessarily, I would say, great user experience, and I think it has become sort of industry standard, and users just accept it. So no one really bothers about this too much. But I think this is sort of I think it requires one event to make to sort of show that this sort of way of how exchanges work is just not really good. And I think we have seen it now with Bitcoin transactions being congested and so on. So now these bigger players like realize, oh, actually the Lightning Network actually might be quite good in these scenarios. But they're kind of reactive. They're not proactive. They started out that way. They stayed that way. And I think what needs to happen is someone like Kollider to come in and say, look, I mean, this is a much better model, and users approve of it. And then they sort of follow suit. Or like there's actually, there's actually some event that makes them, like realize that doesn't scale, I guess.
So you guys are taking this like kind of proactive approach. Kind of, I look at it as kind of like you're like a Bitcoin native exchange, and I use that term to kind of mean that you're taking the approach that Bitcoiners would like other exchanges to take, which is to not custody funds and to like encourage people to take funds back themselves once their trade is complete. But I want to get into the instant settlement piece of this and why that's important. So you said you kind of saw Lightning and noticed that was kind of a tool that you could use to fulfill the vision you had for this kind of instant settlement and sweeping of funds. When you first started using Lightning, what were you thinking that it would accomplish, and has it lived up to the expectations you had on day one back in 2019 when you first set out?
Yeah, I think our expectation was that we basically make that possible. People when they see opportunity, or from a retail point of view, they see an opportunity, they want to get in. All they have to do is scan that QR code, and they'll be like exposed to whatever price they want to trade. I mean, that was the initial idea, and Lightning really lived up to this because it does work. And I think the experience that people get on Kollider is, I think, incredible. And so that was that sort of completely fulfilled our expectations. I think I guess going forward, I think there's so much sort of being added to Lightning to even sort of improve these the way it works. So obviously there's definitely problems that we are facing throughout this whole journey, of scalability issues, of making this actually work at scale, because even your Lightning node is constrained by certain factors, like how many invoices they can generate per second or whatever. So there was definitely problems, but all these things have been sort of resolved as we were going on, as we were building. Because obviously that Lightning Lab's super active on like improving their things, and now it's been incredible because we, at the beginning we were like doing a lot of maintenance on the nodes. We were adding some high level features to like make it work for us, but now it has been really like just running itself, which is incredible. We had zero problems, so it really did sort of live up to what we were expecting, at the beginning. But now obviously there's sort of next, what's the next thing going to be. I think that's sort of on our like most in our heads, because so we achieved what we wanted to do, and now what can we do. And also, is this settlement infrastructure, is it possible that actually like institutions use this, as a global, clearing sort of system? And I mean, there's definitely features missing right now, but I think now, since institutions are getting sort of more aware, of its existence, they're actually talking to us. So we actually having market makers speaking to us and telling us, Lightning needs to have these and these features, which is great. I mean, it came a long way basically to get there, because obviously at the beginning there was nothing. There was no one really wanted to sort of like engage with that because it was a non-problem, I guess.
Yeah. Now, in the last couple of weeks, we've seen fees on Bitcoin's main chain dramatically grow to the point where people cannot stop talking about it on Twitter, and everyone is in this high fee environment mindset, and there's a lot of hot takes and predictions about where Bitcoin heads next. What I want to hear from you is whether or not you saw any changes to Kollider's business, being a Lightning native business, in that last week or so. Like when fees really picked up, did you see, volumes increase or decrease, or any changes to your node, or any challenges in that kind of like tense environment that we've had in the last week or two?
No, which is I guess a good thing because trading just went on as per usual. There was zero sort of effect on us because we're using Lightning. I mean, we had some issues of force closes being very expensive, but I mean, beside that, like business comments as usual, which exactly is the reason why people should have it as sort of their way of um, interacting with exchanges is because of exact that reason. Um, and it's kind of funny that people just now realize that this is necessary because Bitcoin on the base layer was never going to scale, which is interesting. But I think this is exactly what I said at the beginning. Like these bigger players like Binance and Gemini. I mean, they're all reactive. They're not proactive. They wait for like an event like this to come to actually think, like that makes sense. So that's I guess why they're now working adding Lightning is because of that reason.
And now, when you think about Lightning moving forward, you mentioned there's, potentially features that you would like to see, and it's not perfect today.
Yeah.
What comes to mind? What things can you enable with Lightning moving forward, or what things do you hope to enable?
I mean, so I'm mostly right now because, as I said, like we're talking to more institutional traders and wanting to sort of use our platform. And what they kind of want to know, basically need, is a more, I guess, secure setup, which Lightning right now, as is, doesn't really enable. I mean, as an example, so obviously the node itself is a hot wallet, but that's fine in a way. That's not necessarily a problem. But for example, features like um, make payments only be able to route to one other node. Because if someone takes control of that node, they're concerned that they just drain a node to some other node in network, because they can, right? It just routes through. Obviously, you can just then argue, well, we'll just have like a two-node setup where you basically have the trader, the institutions node, and your Kollider node, and they just basically stream payments in between each other. Problem with this is you don't really take advantage of the routing network because you kind of always have to swap in funds or loop out funds as P&L changes. So you kind of want to have your node connected to other nodes, but basically they want it so that these payments can only be routed to one node and they can be locked to that. For example, that's one feature that sort of they were asking for, which is quite important. So it's all about security, I would say, and like for these very specific applications of large channels being dedicated for a single purpose. And yeah, so that's sort of something I would like to see in the future, which I'm sure will be sort of like built eventually. It's just like obviously we have to do the base work first, but it's not necessarily a deterrent, but it's like feature state. So for example, want to see.
Yeah, that makes sense. Okay, now you mentioned the exchange and kind of professional traders using that. You have a number of different products at Collider, though. You have a wallet, you have a feature that allows people to peg their balances in a synthetic dollar. You have a Nostr integration, a relay. Um,
Mm,
Talk to me about all these different components at Collider. Can you give listeners just a background of how they all connect to each other?
yeah. So Collider, I would look at as a platform, as a base layer. It's sort of the underlying engine that basically powers everything else. Maybe not the Nostr stuff because that's sort of separate. But if you think about the wallet and the synthetics, the exchange is where all the sort of magic happens. And these other products are just kind of satellites that connect to this sort of core engine. And so we built Collider Exchange, which offers derivatives, and the most natural application for derivatives is hedging, stability. And we realized, like in the last 2 years, working on Lightning, is a lot of users use obviously Lightning payments, and even especially now where all these sort of like developing countries adopt Lightning to go about their daily life, they need stability. So this derivatives exchange is a very natural application to stabilize Bitcoin, because this product that we're trading, this inverse perpetual swap, is basically I guess a hedge against the Bitcoin fluctuation against any sort of fiat currency, depending on what pair you're trading. So we realized that, and thought, well, we couldn't offer this product completely sort of abstracted away as a wallet where people swap in and out of a fiat currency. But what actually happens is, if you buy $1 on Kollider wallet, you execute a short trade on Kollider exchange. So the wallet and the exchange talk to each other. And that basically creates a very organic sort of trade flow from the wallet to the exchange, and we can really separate the user base between like professional traders and retail sort of like customers that just use the Light network, for payments. The most obvious application. And the wallet itself has many features. Like, we just shipped one, which we're super proud of, which is the first dollar cost averaging feature for synthetics. But like one of the features is you can manage your Nostr keys within that wallet. So you can plug in your keys, and then if you have a Nostr client that integrates this this connection socket between the wallet and a browser extension and the client, you can connect basically, and all the messages are signed in the wallet and not on a platform. So you don't have to put your keys into the client. So you can keep them safe in the wallet. And yeah, so that's sort of the Nostr side. And then we did a small experiment where we sort of fiddled around with the business model of Nostr relays, and sort of led us to build the first subscription-based Nostr relay. The first couple relays that came out were basically either free, or you had to pay us an admission fee, right? But that's sort of one-off fee that you have to pay once and then never again, which makes sense, I think. But ultimately, you kind of the Nostr operator, Nostr relay operator needs to have a continuous sort of like income in order to improve and maintain the service. So we thought like subscription is sort of the next step up from that. People get continuously sort of payments from their users to provide like a supreme experience, spam filtering, and so on. So yeah, we built this sort of like as a sort of experiment, but that's sort of completely separate from the exchange. But it's sort of in the our own wallet obviously connects to that relay. But the wallet itself basically allows you to manage Nostr keys. So that's sort of the connection between those. And that's pretty much right now the product stack of Kollider. And we have also this open source project that we maintain, which is called LNDFX, which is pretty much so there was, back in the days, like when Blue Wallet came about, they built this other project which was called LND Hub, which is basically just a custodial Lightning service, which is open source, and this was basically powering Blue Wallet. And we basically extended this to add the synthetic fiat accounts to it. So basically, anyone can run this LNDFX project to give their users synthetic accounts, fiat accounts. It's a little bit like LNbits, the way it works. But yeah, so we also have that, but that's an open source project. And that's also the project that basically we deployed, and that's powering our wallet. But that that part of the product is open source. So yeah, so that's sort of the overview of the the exchange and the wallet and this open source project.
Yeah, that makes sense. Okay, let's start with the exchange. You mentioned this is kind of like a venue primarily for professional traders and more advanced and sophisticated traders. What are the most popular kind of markets on the exchange right now? Because I believe you have a few different ones.
Yeah, we do. We only have two right now, though. We did a bit of a sort of a change in sort of strategy, because obviously, as we were launching the exchange, we only started one product, which was the BTC USD pair. which is also the most popular one for obvious reasons. I mean, it's most liquid asset just generally in the world, the crypto world, and so we used to like list ETH, USD, and like all these sort of other chains, but we really sort of wanted to start concentrating our liquidity on the most important pairs, and also pairs that are only Bitcoin pairs, because the synthetic stablecoin, which we are super bullish about and which we're pushing, relies on having these Bitcoin to some fiat pair. So, for example, we currently have two pairs, which is the Bitcoin USD and the Bitcoin Euro. And that basically allows us to create a USD and Euro synthetic account, because we have these two pairs. So if you buy euros, it would short a BTC Euro contract on the exchange. And going forward, what we will likely do is to add more of these BTC pairs. For example, BTC yen, BTC Canadian dollar, for example, just to give us the ability to have more synthetic fiat currencies. So this is sort of what we're doing right now, and that's sort of these two products that we're currently having, and so that's what we're going right now with our current sort of strategy.
Yeah. And then, when you think about over the last few years, and you look at volume from from the exchange's perspective, so thinking about like just traders using the exchange, are you noticing any patterns of like, how volume ebbs and flows? Is it grown over time consistently? Does it, flood in and flood out with the Bitcoin price? What is that kind of relationship like between, prices and activity in the markets and then your volume and kind of like flow of liquidity?
Yeah, so generally is volume almost always doubles on days where Bitcoin is green. Like there's always this correlation, where there's a massive spike in volume when Bitcoin pumps. But yeah, over the so the course of our existence, obviously we have been in sort of like alpha beta stage for quite a while, where we obviously were very careful with amounts and so on. We onboarding people slowly, but we were able to like gradually increase the volume, and because we also we are constrained obviously with liquidity, because we are our own sort of order book, and we have to make sure that liquidity is always in the book. We spend a lot of time basically getting like market makers on board, because we're kind of relying on their sort of their ability to provide liquidity to grow. And yeah, it's just I guess within, I would say, last 6 months, there has been a massive sort of interest from sort of these guys to interact um, with Lightning, and especially on the synthetic stablecoin side, because they like this idea of taking the opposite side, because obviously they are sort of more on the speculative sort of side, and the users that want the stability, they want stability, so they're on the other side. So they're particularly looking for making market against the synthetic stablecoin. So we basically have seen quite the increased interest of these sort of more institutional clients to come on and basically make markets, because of this sort of whole sort of renaissance of Bitcoin, where there's a lot of like new stuff happening. There's all these like markets, emerging markets growing, adopting Bitcoin to do payments, and to store value, and to access just general financial markets. So definitely, there was definitely a long time between 2019 and when until we actually saw this sort of spike, or like this inflection point where Lightning really kicked off. And from then on, we basically growing really really like sort of exponentially in terms of like volume from that point. But it was a long like time to basically try to convince people that that's sort of the way to go on the institutional side.
Right. Now, I have a question about the wallet and the trade that happens behind the scenes when someone converts into dollars. So
Yeah.
if I've converted into dollars, and I'm just a consumer, right? I'm not like a professional trader or a market maker. If you have a bunch of consumers that are converting into dollars, they're taking a short BTC position. Is that adding value then to the traders on the exchange, that there's this like constant demand for one position?
Yeah, so I guess what a lot of people argue is that that will generate a lot of like downward pressure because a lot of short orders come in because people swapping into fiat currencies and then creating a massive, I guess, short position on the exchange, or like more short pressure. The positions are always neutral, but that's sort of the concern of a lot of people. But the reality of that is that the market makers that trade against that, they pull in liquidity from other exchanges like OKX. They go they go long on Collider, but then they go short on OKX to hedge that. So tapping into another liquidity pool, which it's very simple because also OKX implements Lightning, although not like in a very nice way right now. But like ultimately, I think they'll come around to doing it properly. But these market makers, they have no issue of like hedging that like this sort of like demand on other exchanges, and these other exchanges, especially BTC USD, is the most liquid derivative in the world. So there's never any problem of not actually filling that demand of people swapping in into USD. And, it's obviously it's possible, but I would say it's unlikely.
Right. Okay. Now let's get into the wallet then. You know, I want to understand what you expect consumers to be able to do with, once they've swapped into dollars. Are you thinking about like potential then applications for them to spend those dollars or to do things with them beyond just that initial swap?
Yeah. So we just, as I said before, uh, we just released a feature for dollar cost averaging, which basically you swap into fiat and then so the synthetic fiat, and then over time you swap back into Bitcoin. Right. So you get you get a synthetic fiat value on the wallet, and then you dollar cost average over time, buying back your sats, obviously for prices at that time. So that's, for example, a application that can just live within the wallet. But other applications, I guess ultimately it's payments. So any marketplaces that accept Bitcoin, people can spend directly from their fiat accounts, which is quite a cool experience. And But yeah, I mean, within the wallet, I guess you can also obviously receive zaps. So paste zaps on Nostr, which is another application that it supports. So yeah, I mean, yeah, I guess generally, I think the wallet shouldn't have like too many features. I think it should do like one thing quite well, which is have a spending platform for your sats. But I mean, yeah, I guess that's sort of like what we're doing right now, at least sort of on the feature side, to kind of make it interactive or have some sort of like ways of like using your Lightning Bitcoin.
That's cool. So I want to make sure I have it correct that if I hold a US dollar balance in my Collider wallet and I want to spend Bitcoin, or some merchant is offering me a product or service and it's paid in Bitcoin, I can still spend out of my Collider wallet, and a swap happens at the moment it's sent out. Is that correct?
Yeah, exactly. So in the moment, so when you get an invoice from your merchant, it will basically be converted into dollars if you want to spend from your dollar account, and then we basically deduct that dollar amount from your dollar balance, but then also reversing that short trade to unlock sats for that amount, and then send these sats to the merchant in that moment in time when the invoice is provided to Collider wallet. So
Very
it basically
cool.
happens all behind. There's a basic, like you said, there's a swap that swaps back your USD into uh, Bitcoin, and then the Bitcoin are sent to the merchant.
Right. What are the implications for reporting and taxes and kind of like compliance stuff associated with all these swaps? I mean, I imagine at small volumes it's not super important for some people, but I know at large volumes, and especially if you're dealing with professional traders, or if you're starting to deal with people who are sending and receiving a ton of money between swapping between Bitcoin and dollars, these things start to matter, what does it change at all the requirements for someone to, you know, incur a capital gain if you're swapping instantly at the point of sale?
Yeah, I think you will be like susceptible to the exact same rules because you're ultimately you're trading in and out of a different asset. So
Even though it's
I
really
can't.
just a Bitcoin short position.
Yeah, exactly. So you're I guess the rules would apply, but even if you were buying dollars, you would still have to pay tax on whatever capital gains you make on that changing asset. So I don't think there's any benefit on that, like that lets you get around this issue. Um, but again, I'm
Oh, I
obviously
see.
different jurisdictions are different. But yeah.
That's fair. Okay, now, one other question I have as it pertains to wallets is that I've seen now there's a number of companies in the Lightning space that are building out wallets in kind of like web browsers in
Hmm.
different ways. So, there's Albi, which is one example. That's kind of like browser extension. You guys have a browser extension. I know you're doing slightly different things. Um, Mutiny is working on like a Lightning node in the browser.
Yeah.
I know of Mash is building out. Mash has basically wallets that are integrated on directly on the websites of people. So, for example, my website has a Mash wallet on there, so anyone
Yeah.
can send Sats directly from the wallet without installing an extension. There's a lot of different approaches that are being taken.
Hmm.
Maybe this ends up being a lot of different solutions because there's a lot of different applications. But I'd love to hear your thoughts on why your kind of like browser extension, your exchange backend, why is this the right approach?
I wouldn't say it's the right approach. It's a approach with a strategy, I guess, which I think it's all matters in a way. We obviously have plans to sort of further develop the wallet backend, especially because I agree that there's definitely ways to make things much better in terms of security. Like running a node in a browser obviously would be kind of amazing because you kind of have basically a completely sovereign in a way. But the problem with this is then you also have then probably manage liquidity. There's better tools that help you do that maybe, but like I think what we're currently doing, I guess, of what the wallet that we build is that we want to onboard as many people as possible, and for that purpose, we built this wallet, which is never meant to hold a lot of funds, right? It's meant to as a gateway for people to come in and try Lightning and see how cool it is. Generally Lightning is more of a day-to-day spending sort of like experience rather than place to hold your funds. But even then, I think right now our primary purpose for this wallet is to onboard people. Um,
Mm-hmm.
Ultimately, I think what we like to do is to further sort of go towards less custodial solutions. Whether that's a completely isolated node running for each user or whether it's something more federated, that's also like something that we're looking into. eCash, for example. I mean, that doesn't really solve the custodial problem, but at least it has some sort of like distribution of risk. But yeah, no, I mean, we're not. I wouldn't say this is the best solution in terms of, I would say like security, but it's definitely a good solution to um, onboard people, and that's sort of what we're trying to do with it. That's on the wall, and that's basically the same idea on the exchange, right? So we're coming from a very institutional sort of background where we know institutional players that you can't give them DLCs, right? That's not going to work. Like they need to have the same sort of like way to interact with platforms in order to use them. Um, so what we're trying to do with the exchange is to like have a transition to like first just make them use Lightning, right? Because they don't use Lightning right now, but they won't use Lightning if it's like super complicated and unusable. But like give them everything they need plus Lightning to make it attractive to them, And then as time goes on, as more stuff gets developed and improved, you slowly moving to a better model, which I don't know what that will be, but this is sort of our idea behind this whole thing. It's like, it's not the best solution, but it's a good solution to solve this problem that we think we need to solve, which is get people on using this P2P payments network, because ultimately that's what we believe is sort of way to do better business. So that's how we think about it right now. But we're definitely not like finished with what we want to do with it.
I hope you're enjoying the show so far. Just a quick message from our sponsor, Voltage. Voltage empowers engineers to integrate Bitcoin and Lightning Network payments into their business stack with an enterprise-grade experience. The team at Voltage is building the complete toolset so that you can do more than simply spin up nodes, but also understand and interpret your node's data. Their new product, Surge, gives engineers the capability to quickly solve problems and optimize operations. With node insights and visibility through time series data, you get dynamic and complex insights never available before. You can get complete control with insanely fast onboarding, advanced client-side encryption, and zero management infrastructure, making backups, networking, and upgrades simple. Get a free 7-day trial today at voltage.cloud. Now, on the topic of onboarding people, you mentioned that was a key focus for Kollider. What are some of the successes that you've seen, experiments you've run that have managed to get a lot of new people using Kollider? And what are some of the challenges, the things that are holding back adoption and that you can't quite figure out how to get new people?
Yeah, I think biggest successes we had, obviously like adding these synthetic fiat accounts, because that's sort of like very novel for people, and announcing sort of that feature back when we launched that wallet, we got a few thousand signups just in a week or so, which was incredible. So that was amazing to see. And then also on the exchange, like being able, for example, to withdraw P&L instantly and sort of like perpetually is amazing. People can't really do that. So these features really sort of made a difference. Like people really like, yeah, I want to use this. This makes sense. Like that will make my life much easier, and also makes me feel much more secure with my funds, because I don't actually have to leave a lot of funds on the exchange. So all the features that we're launching, some of the features weren't that great, but there was definitely some features that really sort of like kind of showcase the power of instant transaction on Bitcoin. And in terms of challenges, I think there's this overarching challenge to that there's, I guess the Bitcoin ecosystem is very, very sort of like different to others, in a way that there is a lot of I would say it's very philosophical in a way. Like you can't better solutions are not necessarily always welcome, or like people just generally have ideas and are very sort of narrow-minded and so on. Like basically convincing people to like move forward, I think that's always a challenge on Bitcoin in a way, because even Lightning had a hard time at the beginning to be adopted in a way by the Bitcoin community, but it now sort of managed to do that. So I would say it's just rigidity of general users, not new users. I would say I think new users come in super like pumped about it, but like basically converting old folk into this sort of like sort of onboard those people onto these platforms. I guess that's hard. So yeah, I guess that's sort of the sort of bigger challenges that we're facing in terms of like user acquisition.
Okay, let's dive into the synthetic fiat component of Kollider. I think this is an interesting one, and I think it's probably worth kind of like stepping back for a second and talking through some of the trade-offs here, because it's synthetic fiat, right? It's not US dollars. It is pegged to a US dollar, but that comes with risks. And as we've seen, the things that have been proposed as good as US dollars in crypto markets over the last year have sometimes not been true. In many cases, there are some cases where they have been true to date, but there are other cases where things have depegged and fallen apart and blown up to zero. So I'd love to get a sense for if you were to take the opposite side of promoting this synthetic fiat and try to really hone in on what are the big risks associated with it. I'd love for you to play devil's advocate there and just give people a sense for what risks they have if they are to participate and use your synthetic fiat dollar.
Yeah. So I guess there's no perfect fiat model, like a fiat stablecoin model, and this synthetic one isn't either. So I think there's a few risks associated with this, and I guess the most obvious one is when the place where you hold the short position gets hacked. So that's one thing. It's the I guess the most obvious thing. If you have a synthetic stablecoin that is sort of minted by Kollider, the position is held on Kollider, and someone hacks Kollider, takes all the money, then that position is gone. So that will basically is one risk. It's just counterparty risk. There's always definitely ways to mitigate that. You can decentralize that maybe in the future, but that's sort of the first one. Then the other risk is the Bitcoin price just tanking, and that means, it's sort of more on a mathematical side, but you'll see that if the price goes down, there at some point the price of the perpetual will exceed the number of Bitcoin in existence. So it breaks down that point, the whole model. However, the reason why that I think is fairly unlikely is just generally because I don't think that's going to happen without eradicating the entire crypto market. But also the crypto exchanges where the synthetics are sort of traded or basically hedged, they have sort of risk mitigation sort of systems, and it's likely that at that point when the price goes down that much, they will do something which is called automated deleveraging, which basically means that all these short positions are basically reversed automatically. So the people on the winning side get their money back, and the people on the losing side get their money back. So the people that have the stable coin, they just get back big bunch of Bitcoin. So that's the worst that happens, which I think, in my opinion, is better than if you have other sort of stable coins. For example, Luna. If this scenario happened, you got a bunch of Luna, but that's sort of like has no value in a way. Where I feel like Bitcoin has sort of a bigger track record of value, holding its value. So, the worst case scenario is that you get basically back your Bitcoin and more, obviously, because you're obviously on the winning side. If you hold a short trade and the price goes down, you make a lot of Bitcoin. So you basically getting stopped out, you get a lot of Bitcoin back, but maybe the price goes further down, and then also you have a depeg because fiat would still be keeping its value as Bitcoin goes down. So that's the sort of the second sort of risk of it is just Bitcoin price tanking. And then the third one is that it might not always be possible to actually enter or buy a synthetic, because there might not be enough people that want to go long on Bitcoin. That's also an obvious one. Like, for example, on Kollider, we have limited liquidity. That means that if someone wants to buy $1 million right now on Kollider, it wouldn't work because there's not $1 million worth of buying power in the book that would be able to go against that short, right? But the thing with this is, and I mentioned that before, is that this market is so liquid that market makers, they can easily pull liquidity from other bigger venues or from other venues generally. Like, even bigger venues will have issues. If this system sort of kicks off, then it relies on the fact that it just pulls liquidity for this asset from many exchanges. So these are sort of the three main risks, right? And I guess, again, like in that scenario, if this happens, you just can't get out or in into the stable coin. so so the three risks here, and they're probable. Like I'm not oblivious to that, but I think it's a pretty good model. And yeah, I think I think the upside on this, the fact that it doesn't require any fiat banking system, it is just Bitcoin. I think it's sort of like um, it for me, I think outweighs the dangers of it. But yeah, I mean, people should definitely be careful about this and be aware of the risks. And we actually, on our website, we have a little interactive tool that actually shows what can go wrong, basically. So if anyone wants to check it out, they can, because yeah, I mean that's what it is.
Yeah, that's helpful. And I mean, I think people are learning today that there is no such thing as risk free. Like in
No.
especially in the U.S. With the risk free rate, and people have been kind of trained to believe that there is a thing such a thing as risk free, and
Yeah.
we're seeing with bank failures that maybe that's not the case. Maybe it's actually not true that you can actually eliminate risk from your life entirely, and that would be in line with most other things in the world. It's being alive is a risk. You could get hit by a bus. You never know. There's all sorts of risks associated with every action, and so I think it's about mitigating them, being aware of them. I do have a question though about the kind of I see a transition underway of dollars being digitized, and
Mm.
this is happening on a few different levels. And one way it may happen is through central banks and their digital currencies. Another way it may happen is through tether, things like that, euro dollars, kind of like offshore dollar denominated assets, synthetic fiat. There's all sorts of ways now to denominate dollars. And I know this is not, it doesn't have to be advice for people listening, but I'd love to hear your thoughts on weighing those risks. Is it, if you had to hold all your wealth in dollars, would you be more willing to hold it in the kind of traditional fiat system, or in the kind of like emerging crypto system? Where do you see the bigger risk?
I think a couple months ago I would have said like I probably will hold it in the traditional system, but given all the things that happen, I would not actually do that anymore. I would actually think that um you know holding it in crypto, I guess it's all about in my opinion, diversification. And I think that's what is the synthetic stablecoin that so we are like very bullish about makes a lot of sense, is because I think there's no world where the synthetic stablecoin can only be provided by Kollider. And I think that shouldn't be the case. It should be a consortium of like many exchanges that all basically provide the same stablecoin with their sort of liquidity pools. So if one goes down or one gets shut down by regulators, the others can pull them out. And I think this is the same in a fiat system. Like um, especially like I mean these digital dollars that you mentioned. I mean they're all basically minted by a centralized party, and they have they are, you never really know what's going on um, in these sort of institutions. Whereas I think in crypto it's also quite hard to understand what's going on a lot of times, but at least I think the information is accessible if you try hard enough. So but even then, I think I would still basically try to sort of put my eggs in, not my putting all my eggs in one basket, and sort of diversify my portfolio of fiat currencies. Even then, because yeah, I think none of these, like you said, there's always some risk, and it's all about like calculating that, and sometimes you can't really. So best thing you can do is just to spread it out, distribute it. So yeah, it's I guess sort of that's my
Mm-hmm.
stance at least.
Yeah, that's fair. It's an evolving situation. It's hard to know exactly what the right path is, but I appreciate you talking about the risks of all the different approaches. Now, I think there's going to be some folks listening here wondering, why are we talking about stable coins? We have the ultimate currency in Bitcoin, and that is the thing we should be working towards, and forget stable coins entirely. What is your view on, the importance of stable coins in an economy, a digital economy that crosses borders, that is not just in America? What's your view on the importance of stable coins over time?
I think it's incredibly important to sort of build a sort of functioning, economy, on a cryptocurrency, because so long as there's no stability, or at least volatility that is acceptable or akin to like traditional fiat currencies, I think it's really hard to make people rely, with their livelihood on these currencies, because like a lot of these, obviously these currencies enable people to, in countries that have a very weak banking system, to access financial markets. And you're probably buying Bitcoin as opposed to I don't know, pesos might be more stable, or like I don't know, I don't really have the numbers on this, but like let's say it is, that might be an improvement. But if you have the ability to have it as stable as a dollar, but don't actually have to, can actually get it, like you actually have it available, then so at the moment at least, that's incredibly important to provide to people. Over time, it's probably also, I mean, it's hard to tell where this is going, but I would always say there's some sort of like mechanism that allows people to mitigate risk, volatility risk, like even if it's not actually hedging against another fiat currency, but basically having some sort of way to guarantee a certain value, I think is very, very important. Because I think most of the I guess users, or generally people, that are not necessarily speculators, they want to have the stability and guarantee that they be able to make next month's payment, mortgage payment or car payment. So I think it might in the end, it might not be a fiat currency, but it just might be some sort of financial vehicle that just allows people to have certainty, because that's, I think, very important to the average consumer. So this is sort of where I see this going. And I think it's great, because you have that market enables both speculators and people that don't want to speculate, because there's enough of both. So I think that works great.
Yeah. And there's a lot of people who are taking this approach. There's a number of stable coin and stable kind of like pegged assets that are being talked about and being issued already on Bitcoin. And of course, we've seen this in years past with more traditional stable coins like Tether and so on. But we have, I think Galoy has stable sats. They have a product, stable sats. Taro is constantly talked about and is like being worked on by Lightning Labs, and that potentially there could be stable coins there as well. How do you think Kollider's strategy for stable coins fits in amongst these other Lightning native stablecoin ideas?
So stable sats is actually exact same product in a way. It's not a different idea. They do pretty much exactly the same thing, but what they do is stable sats is, I guess, just a software, and then you have Galoy with their Bitcoin Beach wallet, which is now Blink. They basically use OKX to take these short positions. So that's the same thing. I mean, they could just use Kollider, right? And ultimately, I hope they will. Because the idea here, what I mentioned before, is that the idea behind the synthetic stablecoin, there's not one exchange that takes all the short positions. What these wallets do that offer that to their customers, their users, is that they plug into 100 different derivative exchanges and put like 1% there, 1% there, put 1% there of their short position. And then, if one goes down, then, they can maintain a small insurance fund to like pay for these like losses, right? So there can be like really nice systems to like mitigate these problems. But essentially, the StableSats project is exactly the same as Kollider. I think what we build with our open source project is just a more compact version, because when you use StableSats, you have to pretty much run the entire Galois stack, which is extremely, it's quite difficult. So it's really lightweight, our sort of version, and right now it only works with Kollider. But like our idea is to obviously expand it to also work with OKX, work with Bitfinex, and so on. So that is just just for for generally, there's just one way of doing stablecoins on Bitcoin, which is which is the synthetic one. I mean, there is this Taro asset or Tether, which I guess are sort of fiat-backed stablecoins. That's how you call them, because there actually is some mint that holds the fiat. So that's Tether. But yeah, I guess that people obviously have to make then the decision. Okay, well, Tether is Tether. It's a centralized company. You see what happened with USDC. USDC depegged because of Silicon Valley Bank holding a lot of the money backing these stablecoins, right? I mean, that's the issue. I mean, people just have to be aware of the fact that there's just one company that is behind that, and if that sort of goes down, then basically the whole thing is breaks. And Taro is basically just a way to tokenize synthetics. Right now, both StableSats and Kollider synthetics, they're not actually coins because they just exist as a balance on the wallet. So you can't actually send them around the network. But once Taro comes out, what anyone could do is to just tokenize these short positions. And then instead of actually, like I said, like what we're talking about is that people, when you send USD to a merchant from Kollider wallet, like a swap happens. So you swap back into sats and then send the sats. But if you tokenize these swap positions, you can directly send that token, because maybe the merchant also just wants to accept Bitcoin, fiat. So they just get the fiat token, Taro token, but the position never changes. It's actually a more efficient way because you don't actually have to swap. You just keep it. You keep it as is. So then the merchant can come to Kollider Exchange and redeem their Taro token back into sats. So that's sort of right now the way sort of things work. So Taro is not out yet, but Taro ultimately will enable us to basically send tokenized synthetics through the network on the Light network, which is obviously super exciting.
Yeah, that's very helpful. Thank you for kind of breaking down the landscape there for folks. I have another question. You brought up Tether. I saw they released a report, kind of an attestation of their first quarter of 2023. And I don't remember the exact number. I believe it was about $1 billion or $2 billion that they earned from their operation in that first quarter. Is this, first I have to ask, is this something you view as sustainable? Like these businesses that are allowing people to swap in and out of stable coins may have high profit margins. Is that correct? And then from Kollider's perspective, do you view that as a moat? Do you view this, every time someone's swapping between synthetic fiat into Bitcoin, you guys earn on that? Is that a moat for you? Is this something that you think can generate this big, cash flow or sats flow for the business?
Yeah, no, absolutely. And I guess that's exactly sort of, I guess, our sort of intention. I mean, we do have to, at the end of the day, we are a company, we sort of need to generate revenue. And, and I think that's a service that is, it's very clear that the value proposition is super clear. You are providing a service of just like, giving people, that sort of other asset, which they can't get otherwise. And you charge a small fee with. And I think it's a great revenue model for anyone who wants to sort of offer this service. And I think over time it will become much more competitive. Even now, anyone can build this and charge their own, margin. which is obviously Tether has, a much more sort of like dominant markets of presence, and I guess they can charge a lot of money because they're the only other, like beside USDC, they're the only other company. But I think the margin will be smaller over time, but it will always be a really good, I guess, business model for companies. And I hope that this is the reason why there will be a vast number of mints coming out that basically provide that service, basically distributing the risks, because all of them, I guess, work differently, use different exchanges to settle, or even different protocols to settle. So it will basically create a very distributed network of synthetic fiat mints, because it's a lucrative model, but ultimately I guess margins will be thin, but still I guess you break even. But I think it is a very, for Lightning company or Bitcoin company to generate revenue, I think it's quite good.
Okay, let's finish this off with a discussion on Nostr, because this is another component. It's kind of like an experimental thing you guys launched, but I want to give it some attention as well. Can you talk about, so you have this paid relay where you can subscribe and pay sats
Yeah.
on, I believe, a monthly basis. How does that subscription actually work behind the scenes?
Yeah. So um, it's so basically the relay itself obviously registers every public key that wants to sort of interact with it. So every user on Nostr has a public key, and that's how they identifier. And it basically just keeps track of how long someone is connected, and there's like every n weeks or whatever n period, it will basically just send that wallet an invoice through a Nostr direct message. Because we have the public key, we can directly speak to the user. So the user will see every month a message from Kollider, actually a little bit before the end of the month, with an invoice. They can just pay in their direct messages. Otherwise, they will basically be kicked off the relay, and that's pretty much it. It's super simple, but yeah, it works.
Yeah, it's an
I guess
interesting way of doing subscriptions.
yeah, I mean, it would be nicer if there's a way to automatically pay it. So there's some sort of way to have a white label payments, like a direct debit on. I'm not sure whether you have that in the US or Canada, but like basically just making sure these payments come almost through. But yeah, right now we're kind of constrained to what's possible, and the simplest way was just send a message with the invoice, and if they pay it, basically the interval gets renewed by 1 month. Otherwise, the address gets kicked off the relay, and that's pretty much it.
Very cool. Now, in the last couple of months, so I believe you launched this. Correct me if I'm wrong, but I think it was in February or maybe March, and you've had it up now for a few months. And I'd love to hear your perspective on things that you've learned about Nostr in that time span. Like, have your views on Nostr changed? Are you impressed or concerned about the opportunities for earning revenue on Nostr? Would love just your lay of the land over the last 2 or 3 months, and how has that evolved over time?
Yeah, I think we start off super optimistic, like wow, um, new protocol, which is super simple. It makes sense, backed by Jack Dorsey, um, and getting a lot of hype, from the Bitcoin community, which we're super excited about. And then obviously, if you're following the stats, um, on that Nostr Explorer, you'll see like the user numbers were like insane, like in a very short amount of time. It's like, yes, that might be actually a feasible business model for us. That's why we started looking into building something like a paid relay. Um, but I think what sort of like what sort of trickled through then in the end, or now, is that it's very first of all, the user the user activity has dropped dramatically in the last month or two. So I think we were like at one point at like 1.5 million or something, but now we're down to like 200 or something, 200K. Um, is that it's pretty much a lot of the same people in that on Nostr. I mean, we have obviously like famous people come in, every now and again, join Nostr, but like the ecosystem within, it's very similar to the one in just generally like the early adopters, Bitcoin people, and so on. So I think it kind of still needed to sort of catch on to, I guess, people from outside this whole ecosystem. I think that's sort of like that's not what we saw. It was sort of an echo chamber a little bit, and which sort of made us realize that it will probably happen, but like not as pace as we think, because it was just a lot of hype at the beginning, and it sort of died down. But I think the all the application has been built, like how it started out with like these all these clients being like super bad in terms of like user experience. They were laggy, they weren't really working, and we have come a long way. So I was actually impressed with all the developer work that goes on in there. But I think it it basically started off really, really sort of hyped up, but then sort of like hit a wall a little bit, and it died down. And I think now, so we are sort of looking at the reality of it. And I think to actually make sort of or run a profitable Nostr relay, you are, you probably, it probably will take some time for this to actually, happen. But then again, like we're not a super like expert on Nostr, because it's just was a side project. But obviously we've seen sort of our subscriptions going up at the beginning, but then sort of like hit a wall in a way. So, and yeah, I mean, it's just I guess anecdotally what we see, but I think ultimately I think it'll become a way of generating a decent revenue, because building like good relays, that's what we realized, is really hard, because spam filtering is not easy, and curating content is also not very easy. So I think people will pay quite a bit of money to get these extra services.
Right. And has your view on the actual subscription model changed? Like you started with this experiment of like charging on a monthly basis. Is that the right way to monetize on Nostr? And is the path for other companies to monetize on Nostr, should they all be taking that path, or should they be exploring other monetization strategies? Like if you were to start over again.
Um, I think it's a I think it's a sound way of generating revenue. I think you know the I think what we realize is that there is other things that you can obviously monetize. There's not just subscription, but pay by message size, for example, because ultimately you only have to prevent, I guess, what this paid subscription does is just prevent spam, like people just posting stuff that is not of interest to anyone. So you can obviously charge for different actions. It might be a subscription, but it might also just be like amount of messages you send. Like no sane person sends 1,000 messages a day, or like posts 1,000 messages or notes. So you can just basically monetize different actions. I think that there will be probably better or cooler ways to do that rather than just a plain subscription. But I think I mean, it's obviously going down like the more traditional route. I think that will also be possible for to have targeted advertisement. Like I think that's the same thing again. Like people will probably try that if there's enough users on the network. But right now, I think because it is so hard to build a good relay, I think it is easy to extract value from the development work that goes into building these good relays. That for now, I think that's probably the best business model, by monetizing, obviously different strategies, but like just generally monetizing the user experience of the relay itself. I think that seems to be, at least my eyes right now, a pretty solid way to go down.
Mm-hmm. Now, you mentioned that in the last month or two, you've noticed that Nostr activity has pulled back significantly. What do you
Yeah.
think are the contributors to that? And what are the big constraints that have to be solved to bring in the next wave of people?
I think I think the reason it might just be generally always it's just a like sort of a cultural phenomenon. Like people says, oh yeah, cool, this is there's no censorship resistance, somewhat private. There's no ads, there's no bots. But then like people just, I guess, at least I quickly realized is that it's just the same people posting a lot of stuff. So the content was like it wasn't very diverse. Um, and then also spam picked up quite a bit, so it was really hard to actually filter, and so the spam filtering wasn't really keeping up. um I mean that was also a problem. And yeah, um so yeah, I think this was a primary trigger to like sort of like decrease sort of the activity of users on the network. um but I think going forward, what needs to happen, I think, you know I think it can just like naturally just grow slowly over time. But I think what will probably need to happen is just another like big sort of shock to like traditional like platforms, because that's always brings like you know a massive amount of new users into a new social network, is because something else sort of didn't work properly. Otherwise, it's quite slow. Because why would I go to Nostr right now? Like there's no like good reasons really. I think a lot of the initial sort of influx of people was also due to like whole Twitter thing. So people were like very dissatisfied with that, and I think something like that needs to happen again and again, and then more and more people will just stick, and so on. And I guess you also want the right people on these networks. I think Barack Obama just joined Nostr or something. I think I saw that on Twitter, which is great. Obviously, like all these people will drive like or bring people over. Yeah, but it needs sort of like a joint support. So yeah, this is sort of my view on that.
Okay, let's finish this off with a really quick rapid fire round I do at the end of every show. It's called the lightning round. Are you ready?
Go.
I hope you're enjoying the show so far. Just a quick message from our sponsor, Stackwork. Stackwork is a lightning powered platform for generating high quality transcripts of all your audio or video content. They combine AI engines and hundreds of human workers all over the world who are paid over the Lightning Network to assemble these transcripts. And that's what lets Stackwork create better, faster, and less expensive transcripts. To see the results for yourself, you can check out my personal website where I host transcripts for all my podcast episodes. If you want to learn more about Stackwork, visit stackwork.com. That is STAK work.com. All right, first question for you. If you could only hold one asset for the next 10 years and it could not be Bitcoin, which asset would it be?
ETH probably. Ethereum.
Interesting. How come?
I mean, biggest network value. Again, I guess playing it safe. You know, I'm pretty straightforward with these things.
Yeah.
Yeah, I
Yeah.
mean,
That's
behind
fair.
Bitcoin is probably the most stable sort of like asset out there.
Interesting. Um, is there any book that has meaningfully changed your view of the world?
Um, there's a book I really liked was um, Short Answers to Big Questions by Stephen Hawking. That was a really good one. I'm sure you read that,
Hmm.
but that was yeah.
If you could change one thing about the Lightning Network, what would you change?
I would um. That's a good question. What would I change? Um, um, I guess I would. Mm,
Maybe some native subscriptions?
yeah, yeah. I mean that's more of a Nostr thing, but I would love to use it. I would love to use nodes like with hardware wallets, remote signing. I'm not sure actually whether that feature exists. I think it does now, but maybe not. But I would like to use my ledger with some sort of better security model of like um, making payments that require some sort of like cold storage.
Interesting. And then finally, last question, who's one person in the Bitcoin and Lightning community that you'd like to give a shout out to for doing great work?
Um, I'm not actually that much into I'm not following. So I think one person that has really supported us was throughout the whole journey of Kollider was Nick, who's a one investor, Nick Carter. I think he has played a massive role for us. So yeah, I would give him a shout out. He has been very helpful and big supporter. So yeah.
Awesome. Thank you so much for taking the time to chat today. I learned a lot, and I hope listeners did as well. Where can folks go to learn more about you and Kollider?
So people can reach me on Telegram at Konstantin Wu, or on Twitter at Consteve, or just go to our website, Kollider.xyz. Find everything there, basically our blog, our Twitter. Yeah.
Awesome. Thanks again for the time. Hope we can do it again
Cool.
soon.
Thanks, Kevin, for having me. Have a good one.
In the last 30 days, you guys sent in 52,790 sats. That came in from 47 different supporters. Big shout out to everyone who has been donating. We have a lot of comments to go through as well. Let's see how far back we can go. We have on episode 105 here, we have, this is in response to Lisa Nigett. Odium sent in 3,000 sats and said, Nifty is great, and Kevin is really good at asking the truly interesting questions with one of these emojis. So thank you, Odium, for the sats and the kind words. We have Mars Sats, who has been creating lots of clips on Fountain. Thank you, Mars Sats, for that, sharing the show more widely. Michael Matulev says, great conversation. Thanks. Again, in response to episode 105 with Lisa Nigett. North of the Wall sent in 2,121 sats and said, Fountain is outstanding. Did you know that the Fountain team only consists of 4 employees? If you can, show Fountain some support with Fountain Premium so that Oscar and his team can develop an even better product. Thank you for the kind words about Fountain North of the Wall. I did know it's a very small team. They're working really hard, and I'm impressed with all the progress they keep making. Blockchain Boog sent in 500 sats a few different times and said it's 2023 and capacity is now 5,500 Bitcoin on Lightning. Still hard to do a 1 Bitcoin payment. And this is in response to episode 9 with the Boltz co-founder. And this is an episode I did about a year ago. So thank you, Blockchain Boog, for bringing that episode back. And appreciate all the boost. You sent in a number here, 500 sats, 1,000 sats. Really appreciate all the support. We have Aman Seuss, who created a clip of the show. Thank you. We have a comment on Stacking Sats number 3 with Ben Justman. Said, I would love to learn more about earning stars. I think they mean earning sats. I have been looking through games mostly and the Fountain app. Thank you for your help. I'll take any more info you have. If you are looking to earn sats and not stars, I recommend checking out the website that I built called stacksats.how. It shows you all the different ways in which you can earn sats today. There's about 80 plus apps listed there. All the guides, all the stories of people earning sats are going to be listed there. So definitely check that out. And again, thank you to everyone who has been supporting the show. It means a lot. We got a lot more episodes coming up shortly. So stay tuned, and I can't wait to see what you guys send in this week.